Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, June 3rd, 2013. We're looking at some various market charts going around the globe. So today I'm going to try to teach you something that you will learn through experience. If you trade long enough, you'll eventually find yourself in a bear market, and you'll learn some certain things about that. And you'll learn to start to read the candlesticks, not just for what they're telling you on the buy and sell pressure, but also the sentiment of the traders that are out there. And this information I'll show you here on Australia markets that are further advanced, and then I'll be able to show you other charts that are not as advanced, and you'll see exactly where we're at and what phase of the trade. The main thing to show you right now is we're looking at Australia's market. I've already talked about this one's in a bearish trend here, AORD. In this particular scenario here, you have the nice move to the upside here, and then you get something that's different. You start to get this little kind of sideways moving activity doing this, okay? At this point, we had multiple things telling us to look for this to break down. You had the bearish divergence formation, and we talked about that. We had the, let me send that up so you can see them. We had the shooting star conditions. You had one here, you had one here, another one here, another one here, another one here. Lots of sell signals right there. All this is formed because there's more sellers at this level than there are buyers. And then I told you at that time, all you were doing was rolling over, and you're going to be moving lower. You also notice something else about this chart whenever you look at it. You'll notice the candlestick sizes. Look at this little candlestick here, 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 here. These are very small candlesticks. Even these guys here are still very small. And this is what's happening when you see these little several days to the upside like this, very small, and then a bigger down day like this, just erasing what just happened, back and forth, back and forth. What's happening is investors or traders are arguing back and forth as to what direction they think the market's going to go, and you can whenever you see this, you can learn something about sentiment at that point, and that is that they don't know. The bulls are still believing that there's some kind of potential here for a rally, and the bears are coming in saying we think this is a good place to come in and enter this market for a short move. So you're seeing that argument back and forth. Then you'll see these guys disappear. As soon as they're proven wrong, you start getting that bigger candlestick formation. Once you get the breakdown, actual price is broken and closed below that support line, you start to get a massive move to the downside. Why do you get that big move? The big move happens because the argument has been solved. Bulls realize they're wrong, and they start to cover their positions, or they get stopped out, things of that nature. So that's something to think about. Is there's these multiple phases of the trade that you have going on. You have the move that goes to the upside, then you stop trending up and you start to go flat. That's where something's changing here. We don't know what yet, but as soon as you see the signs that can tell you enough information to look for a directional break, and in our case, we were looking at the bearish divergence formation telling us that this move here wasn't real, the sell signal, so forth and so on. That told us to look for the break to the downside. So once you have that in play, you look for the expansion move here. Now, there's something else to be noted. You can look at the various different levels as well on the chart, even different time frames. So if we go back to this time frame here and we say, all right, we have this little support that's going on. You may call it a zone, if you will. We'll just kind of do it like that. All right, and you can see that you pull back, you bounce off of this for about 8 days. They're just moving sideways, up and down, which direction are we going to go? When we break to the downside, bounce off that lower support, come back up here, then we kind of kick back and forth, back and forth. Note the number of days that we trade on this level here, and then you come back up here. The next time you come back down here, you get 2 days. 2 days rather than what you had 12, 14 days over here that you could bounce on it. At this point in time, you only get 2. That's important, and it's because it's showing you the momentum to the downward side, and the bulls, the bulls are getting weaker and the bears are getting stronger. That's what's being shown on this chart very clearly. And another thing I want you to think about whenever you're looking at this, a lot of guys are looking at these things here. Ultimate oscillator, in my case, you may be using the slow stotch, fast stotch, many different oscillators out there, and they're looking at these oversold conditions. They're saying, oh man, I'm going to get out of my short position and go long. One of the things you're going to learn in a bear market, you're not really even in a real strong one yet, but once you get in one, you're going to find that they can do something else other than signal oversold. They can also just be signaling the degree of downward momentum, and they can stay and oversold for an extended period of time. And I'm going to try to warn you guys as we go through this and when it gets worse and worse and worse, that I do not want you attempting to counter trend trade. Don't just say, okay, now we've had a nice move, I'm covering my short, I'm going to go long for a bounce, then I'm going to go over here and go short again, and because these will become more and more steep downward move. You'll just be looking like someone diving off of a cliff. So I want you to think in bear market terms, and the only way to do that is by looking and analyzing the chart and see what they're showing you for the support for bulls or the support for bears. And right here you can see bulls are growing weaker and bears are growing stronger. So that's important to know. Now let's go look at some charts and see what we can learn about the U.S. markets. Okay, here we are looking at the Dow Jones Industrial Average, and you can see today's activity is up about 138 points, and Friday's activity was down about 200 points. And so you've got that back and forth thing going on here. We had this nice move to the upside, and then we get a massive sell day in 2 days. We erase a week's worth of trading activity. Then we get 2 days to the upside, and then 1 day down, 1 day up, bigger day down, 1 day up. This is that rolling over pattern that we just saw on Australia. You're seeing it in the U.S. markets here as well. This is still showing that there's a mixture right now. We see that the bulls are still fighting. They believe that there's a rally coming, and then the bears are coming and saying, now this is a really sweet spot for me to be shortened, so I'm gonna take that opportunity there. And so this is what's happening right now. It's back and forth, back and forth. One of the things I don't want you to do, I heard someone mentioning it earlier, whenever you're in this scenario, you've got to give it room to breathe. That's what I call it. Just basically price activity moving up and down. That's fine. Let that happen. What you want to do is keep your stop set off the high and don't advance it too early, because you can still do this number. Okay, you can still come up here, test that, and come do back and forth, and this stuff can happen for a while. I can't tell you the exact day it's going to snap, so you need to keep your stop backed away from the activity. Otherwise, you can get stopped out prematurely. So you don't want to do that. Let it continue to form. Let it do whatever it's going to do. Tomorrow's Tuesday. We've had like 20 some odd consecutive days or consecutive Tuesdays in a row to the upside. So don't be surprised by any bounce here and there. That's fine. The thing you should be watching for is when they stop doing that. When you start to see massive expansion to the downside and no more bulls. At that point, there's no more buying days. Then you know at that point the argument has been won in the direction of the bears. And from that point you start to become even more bearish and you start adding to your positions over and so on. But right now I just want you to learn to analyze the price activity and see what's going on and what it's telling you about the sentiment of the traders out there and how that is going to benefit you, or what it should be telling you about your trade. For example, because I know that I'm going to be doing this kind of activity right here, I'm not going to be looking at taking my stop loss limit and advancing it to here or to here. That would just be silly. It would increase the odds of me being stopped out for no good reason. So in that case, that's something you should learn. One more item that I think you guys probably benefit from is to point out, if you're looking at a chart, and I know if you're new to candlestick analysis, it can be very confusing looking at the candlesticks. There's a lot of information being portrayed in every single one of them. And so it's hard to see the actual activity that's going on. What I recommend you do is focus on a couple of things. First, note the high close. You can see that the high close is here. All right. Then note the lowest down day, the lowest close on the down day. So in this case, it would be about here. Then continue to draw it up to the highest close, all right, and then lowest down day, all right. Now, if you just simply drew that line, which direction is that going? Well, for the past 2 weeks, it's been moving down. It's pretty clear. Now, if you look at all the candles together, you're like, oh man, I got that big day here, and then no down day here, and then we get a bigger day here. It can be more confusing. So, and this is one of the ways to just look at that. If you want even clearer picture for yourself, you don't want to go out there and do that, which I recommend you do it the way to show it to you. But if you don't want to do that, you can do something else, and I'll show you that in a moment. But the main thing here is to focus on what's really happening overall, not from one day to the next, because you can get a lot of false signals in there and stuff like that. So learn to really see what's going on in your chart. Let's take a moment now to look at the BSE, or the India Bombay Stock Exchange. It's another nice chart here. You've got the nice move to the upside here, and then you stop the upward move and you start to move sideways, just doing this little number here. High close here, low close here, high close here, low close here. What you can see here, again, the same basic overall thing we talk about. You change direction. You went from up to sideways. You're looking for direction. We think that the hammer candlestick, the shooting star candlestick formation, the bearish divergence formation indicates the same thing that we were indicated on the Australian market, and we're seeing this again globally. So it's important to take that into account as well. And then we start to look for a breakdown. We're already seeing it on this chart, but other charts will be harder to see at this point in time. So it's important whenever you're looking at your charts, know that they're all basically doing the same thing, and you can tell that different various ways. But again, I want to point out, look at the low close here. Look at the lower close here. Look at the lower close here. The direction is down, and that's the obvious being indicated right there. So again, I will be looking for this to continue moving that direction, and as it becomes more obvious, you will see fewer and fewer bulls or people willing to buy in the market, and more selling going on. So that's again very important. Again, once you come down here to this level, which you're going to be testing again, I do not anticipate it will hold. Neither did it hold on the Australia market. So I'm again pointing out that we are seeing a structural change here from the uptrend, the sideways moving market, and now into the downtrend. And in many cases, we're already seeing a bearish market starting to develop. So I would anticipate them all to be moving in the same direction. I want to show you one more chart. It's really important. I know this is a long video today, but it's really important that you start to take note of the structural changes that's going on in these markets. Okay, this is the EWJ, the Japan iShares, and this particular chart, I'll point out a couple things to you. You had a situation where you were moving to the upside here. You gapped down. We warned about that. You had that very massive gap here, looking for a buy opportunity off the 50-period moving average. Then you get this massive gap to the upside as you had the news come out that the Bank of Japan was going to be dumping serious amounts of money into the BOJ is going to be dumping a lot of money into the market, and basically they're going to be manipulating their interest rate, like everybody else is, and driving price higher, right? Okay, that makes a lot of sense. And so we do that. We exactly turn around and we say, all right, well, then we come up here and we rally and we rally and rally, and that was great because we have all this money going into the market. Then all of a sudden, boom, it's over. Just that fast. Come down here, we gap down, leaving a huge hole. It didn't even come back and fill, and then we started driving lower. Now, there's a few things to point out about this chart. Number one, you're now trading at the price activity, same level you were at before, as though there was never that announcement made. That's, of course, going to get some activity, some buying activity, and that's why you're seeing today's hammer candlestick formation, because people realize, man, it's like we went back in time. We were able to buy ahead of this news. That's true, but there's also something else going on here, and this is called a massive sell-off, with a lot of self-pressure here. You can tell that by looking at the volume that you see in the activity here. This, again, is something that's telling, and it's tipping their hand. They're showing that you're starting to see a structural failure here. You're also getting signs on the chart telling you the same thing. You're getting these little signals here. You're getting, okay, there's one there, and then there's one here. These are sell signals after a massive sell-off. So, yes, you can bounce here. That'd be great. Actually, if you got to bounce, that'd be a great opportunity to go short if you could find the right entry opportunity, which I'd be looking for. But at this particular point in time, I want to just point out this shouldn't be happening. You shouldn't have had a pullback to this level unless something has changed that we may not know about right now or whatever, but the charts know it, and the charts are showing that there's a structural change happening from a bull market to a bear market. We are breaking down here. We're doing things that you shouldn't be doing, and so that's very important, and that's something I will be keeping an eye on. Okay, for those of you guys who didn't get to see the charts that you wanted to see in today's video, sorry about that, got kind of long, drawn out, but if you want to see any of my short-term or long-term charts for any of the major markets that I track for you at PerfectStockAlert.com, and there's 19 of them, you can go there to the market chart section, and they're updated every single night. We've already updated many of them, so you can check them out. Also, there's a swing trade in here that we're talking about that we really like, and again, it's a bearish trade. And that's about it. If you've not been to the free website of PerfectStockAlert.com, what's right there, it's 100% free, and all we ask in return, refer a friend. God bless, take care, and I'll see you in tomorrow's video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.